All right. Good morning, good afternoon, good evening, depending on what time you're seeing this video. I hope you're having a wonderful day. I hope your day is great. All right. In our last class, we talked about what Forex is and some how to open the MT4. I explained the time frames, the 1 minute, 5 minutes, 15 minutes, 30 minutes time frame, the 1 hour time frame, 4 hours time frame. Those are called time frames, and I explain what they are. It means the time taken to form a candle. 1 minute time frame simply means that a candle forms every minute. 5 minutes candle time frame means a candle forms every 5 minutes. And I explained to you what candles are. So those in today's class we'll be going a bit deeper. So let's just dive into that. Okay, when you have your what do you call it now, when you have your mt when you have your mt5 installed on your phone, this is how the app looks like on your phone. So what do? You tap on it. When you tap on it, it opens. So it opens, and when it opens, you like I told you, the first section is for the price, the currency pair, and the prices. Then the second section is the charts. Now you can see that our chart is still bare, and there's nothing there. So for the example, we open the Euro USD. How do we do that? Oh, sorry, this is not the forest chart. Let me go to a proper forest chart. Sorry about that. Okay, so we go to the Euro USD. Okay, here we go. Now, yeah, we tap on the Euro USD. It brings all these things out. It brings new order chart properties. It brings all of this. I will explain that. Then I told you we tap on charts, so it takes us to the chart that is for Euro USD. And here we can confirm that we are on the. Can you see? We can confirm that we are on the daily charts. So we can take it off to 1 minute chart if you like. Okay, so 1 minute chart is loading up. When it comes, you see the 1 minute chart. I told you how to toggle in between. So we already explained this. I told you to toggle it in between the time frame. Just tap on your screen, the blue icon appears. So if you want it to go to 30 minutes, just tap on M30 to go to 30 minutes time frame. Now this one means that a candle forms every 30 minutes. You can see it's different from the 1 minute time frame. So now um, some of the things we'll be talking about today is explaining finally some other parts of the blue icon I didn't talk about in the first class. Like in the first class, I talked about all the time frames, but I didn't talk about some things like this sign. I didn't talk about this. Sorry about that. Let me do that again. Let me do it again. I didn't talk about the F sign. Okay. So I didn't talk about this sign here. I didn't talk about this plus sign. So I'll be talking about them. I didn't talk about this sign here, and I did not talk about this. So I will start from the F sign. This F sign is actually when you tap on it, that is actually where we go and do our settings on this platform. Then going to this plus sign, when you tap on it, this it brings this cross. How do you make the cross go away? To make the cross go away, you either tap on this cross up here. You can tap on the cross of it up here to go, or you tap on the screen again, and you tap on the screen again. Okay, you tap on the cross, it goes. So if you want to come back again, you tap on cross again, comes back. Then you go to the top, you tap on it, it goes. Now let's go to the you tap on the screen again. Now the F sign, you either get it from tapping here, that's the settings, or you get it from here. So any of the two, whichever one you tap on, you get your F sign. And when you tap on it, it will take you to the settings. Can you see? That's taking me there, but we are not doing that right now. what we are doing in this class is we just learned what Forex is, what do we do in Forex, buy and sell. Then in this class, we want to talk about basic terminology in Forex. So the first terminology you hear in Forex is, let me get my pen, is our FX. FX, that's Forex. Forex also means FX. Then the next terminology you hear is what we call candlesticks. Candlesticks. Sorry about that if it's slow. Yeah, we talk about candlesticks. Yeah, what are candlesticks? Zooming out of these are candlesticks. I told you in the last class was just to quickly repeat so that we don't. These are candlesticks. All these things formed now, and if you notice, there are two distinct colors here: the red candles and the green candles, or some say they are blue. The red candles and then the green candles. The red candles mean they signify that the market is going down or that buyers are more in the market at this time than the sellers. The red candles sorry, the red candles signifies that sellers are more in the market than the buyers, and the green candlesticks signifies that buyers are more in the market than the sellers. So that is exactly what these candlesticks, you can see this red candlestick here, you can see that's what it does. So those are candlesticks, and like I said, they tell us the movement of price. They tell us how price moves and all of that. Now, when the market is going, when price is going up, in forex we call it, when price is going up like this. Can you see the thing is going up now? We call it the bearish market. We call it a bearish market, and the green candlestick is also called the bearish candlestick. Then the red candlestick is called the bullish candlestick. Or another thing we do is when market is going down, like in this case now, the price came down from up here. Can you see that? Price came down from it. This is a bearish market. And like I said, the red candlestick is also called the bearish candlestick. So when you hear a bull and a bear, know where that came from. In a forex market, those are the terminologies we use. Not all of them. Of course, I can't tell you all the terminologies in this short video. We will have to spend more time, but I don't want to take so much time. There are some of them you still have to go and do your own research about, because you will need them. Other terminologies you also find useful in forex is you'll find that if you go to this part where you have the currency pairs, or the commodity pairs. Like I told you, we trade a lot of things in forex. We trade crypto, we trade commodities like gold, silver, oil. Yes, crude oil is traded on in forex. Then they trade stocks of companies, Fortune 500 company, stock of companies in Europe. So, but and cryptos, yes, those are the, and for your information, this is the biggest market in the world. It is, I think, $9 trillion is traded every day. I stand corrected, but you can check that out. Those are things you can easily Google. So these are some of the things you need to know about. These these forest classes are these are some of the things we need to know. So I have talked about some of the terminologies that we need to talk about. Also, yes, some other terminology we need to talk about is something we call the what do you call it now? Stop loss. Yes, and take profit. Look at it. SPSL, stop loss and take profits. Now, what is stop loss? What is take profits? Take stop loss means, suppose I enter this trade now. Let's assume I'm not doing any analysis. I just enter this trade blindly. I don't not knowing whether I'm going to. So, like I told you, if I want to buy, we just will tap on this arrow to buy. So let's just say this market, after analyzing my chart, it's got that I say this chart is going to buy. So I'll tap on buy. Okay, I tap on buy. Now, I bought. If you come to the side um, that shows, look at it. This is the stuff I just bought now. This is the stuff I just bought now. It's running at that price. Can you see that? So you can see this is the stuff I just bought now. And another thing I like you to notice is this thing here. There is a number here. Can you see? Please notice that number. That is called a lot size. We'll be talking about that now. Let's go back to the chart. Now, what is a lot size? A lot size is the amount of money you want to make or to lose. If, for example, the amount of money you want to make, if the market goes according to your prediction, if you predict it to go up and it actually goes up, it's the amount that you want to make. And of course, there's one thing in Forex called pips. Yes, I forgot to mention that. That's one. Pips is called percentage in price. It is PIPS. What's wrong with this? Okay, PIPS. Now, what does that mean? It means the percentage at which numbers in this. If you check out the numbers in this price, you can see that the numbers are changing as the price goes up and down. Now, those numbers are called pips. They are actually prices changing. Now, when the price goes the way you predict it to go, you will make money. And if it goes against you, you lose money. Then that brings me to my SL and TP, stop loss and take profit. Stop loss means if I predict the market will go up and market eventually starts going down and I'm losing. For me not to lose all my money, I'll set I'll set the app in such a way that once I lose to a particular stage that is determined by me, and the price still wants to go beyond that place, the market will have to, the stock will have to take me out at a loss. That is stop loss. Take profit means that if I predict that, let me use something practical. Let's predict. You can see current market price is here. Let's predict that I predict that market is going up, and at the end of the day, it starts coming down. Now, if it starts coming down and market has gotten, the price has gotten to this point here, and it still wants to go further down, I will say, okay, if it goes more than this, I will lose maybe $10 or $5, and I don't want to lose that. I will say, okay, please take me out at this stage once I have lost $5. And same thing with take profit. Take profit means I predict that market is going and it is going to this point. If it might go beyond, or sometimes it might reverse, like you can see here that the thing was going up then later came down here. So the market, the price of commodities or price of currencies, they are not usually stable. They don't go like in a normal direction. They don't go up like this and down like this. They usually, if you see from the candlestick, this one is coming down, but it didn't just come down like, it didn't just come down like this. It was like this. There was a little, can you see? That is how the market actually moves. That is how price moves. So if I predict that the price was going to go up, and I say, okay, before the price decides to turn like this, before it turns, I discovered that to get to this point, please take me out at a profit. That is what TP means, take profit. That means I'm setting it that it should take me out at a profit. I hope this is clear. What else do I need to talk about? The basic terminology. Okay, I've talked about this F sign. I've talked about the plus sign. The plus sign actually is used for measuring pips. We'll get there. We'll get there. So I told you about that. Then, yes, There is this one is called new window. When you tap on it, it's asking you to open a new window. New window means once you tap on this plus sign, it will kind of open the chart in a smaller thing. Look at the way it is now. Can you see it? So if you want it out, all you need to do, you can see it has opened another chart kind of. If you want to have two charts on the same stuff, you just put it like that. Sorry about that. Let me go back. Now, how do you remove it? You long press, then you tap on cancel, the red button here. You tap on the red button here to cancel it. Once you do that, it will go away. You come back to your chart. So just to be sure, let's go back to Euro USD chart, and there we are. Good. Now that is for if you want to have more than one window, but you don't necessarily need that new window. Then this part is another part you will need. Let me show you this particular icon. This one is where you would get, you will need what we call markers. Markers. These markers are the things that you use to mark price, where price has been or where price will be. I will show you the use of those things, but let me just tap on it so you can see what I'm talking about. So when you tap on this, you have something like this. These are markers, lines. For example, we have the horizontal line, we have the vertical line. Now this vertical line, I use it a lot. Let me give you an example of that. Let me show you. This is the vertical line I'm talking about. This one is horizontal line. This one in the middle is for trend lines. I will talk about each of them, but let's start with the vertical lines. Now the vertical line, you tap on it. When you tap on it like this, and you come to the chart, it will take you to the chart. Once you tap on it, a line will appear. Now you can drag it anywhere you like, anyhow you want, depending on what settings you are trying to come up with. But we won't do that yet. I'm just showing you how this thing works. Then you can delete it back. How do you delete? You long press it. You hold on it, long press it. Then you tap on this icon that looks like a bean, this icon that looks like a bean. Once you tap on it, it will go. This icon that looks like a bean, once you tap on it, you can see it has gone. So that is um, some of the things we'll be talking about. I just hope I've not exceeded too much time in this class. Yes. um okay. Yes, finally, let me talk about lot sizes. Yeah. Before I talk about lot size, let's go to the stuff I took. Now, I took a trade the other time. Now we are in profit. Okay, we are fluctuating between profit and loss. Now, the lot size means that this is the amount. 0 points. I think it was 0.1. Let me be sure. Let me go back to the. Okay. Okay, we are on 0.1. 0.1 means that, I mean, the smallest lot size you can find in Forex is 0.01. Now, 0.01, like in the case I took, this, let's take a buy again. I did, okay, I think I've taken another buy. No, it didn't go. 0.01. What's going on? Please bear with me. Okay, we are on this again. Okay, so we tap on it. 0.01. 0.01. Okay, now it has gone. You can see now we have to, now the first one is 0.01, and the second one is the first trade we took was 0.1, while the second one was let me show you what I mean. This is what I mean. Look at these two trades. Look at them. Look at the lot size. The lot sizes are usually written here. Can you see it? Those are the lot sizes. It's telling you that as market goes up or down, these are the amounts that you are most likely going to be making or losing. And I will explain what each of them means. So let me just quickly do this explanation, and then I'll call it a wrap for this class. Then in the next class, probably we'll go into certain indicators. And if you have any questions to ask me, please feel free to ask, because I might not have touch some things that you want to ask questions about. When you do, I'll be able to go into that. So let's go into the lot size. Lot size means, like I said, the amount you want to lose or gain. If market goes to your direction, you gain, and if it goes against your prediction, you lose. For example, if you use 0.01 lot size, you are saying, please, this app, anytime I predict that the market will go up or price will go up, and price actually does go up, what that means is that, please, every time the price goes up and it moves upward by 1 point, give me 1 cent. That's 0.01. And if you decide to now use 0.1, that means you are telling the 0.1 means you are telling the app that anytime the price moves up by 1 point, give me 10 cents. So if the market, you predict that the market is going to buy, that is, it's going up, it's going to be a bearish market, like I said in the last class, and you predict that, oh, market is going to be a bearish one, and the market actually goes like you have predicted, that means if you use 0.01, you are making 1 cent each time the price moves up by a point. For each point it goes up, you make 1 cent. And if you use 0.1, it means for each point it goes up, you are making 10 cents. Same thing goes for the same thing for the price when it goes down. So that means if you use 0.01, you are losing 1 cent each time the market goes 1 point down. And sometimes it can go as much as 300, 1,000 points down. That's what we call pips. It can go 1,000 pips down. It can go 1,500 pips down, 4,000 pips down, 4,000 pips up. So that is why you should have that stop loss and take profit. I'll still show you how to set stop loss and take profit.